On Monday, President Trump signed an executive order to create a new sovereign wealth fund for the United States. The president indicated this fund could be used to buy companies like TikTok, and Howard Lutnick, who is the nominee for the Commerce Secretary, stated that they could have used a sovereign wealth fund to purchase warrants and equity in companies that were involved in a recent medical experiment. And Senator Cynthia Lummis indicated with a tweet using the Bitcoin symbol instead of a B that the fund could be used to purchase Bitcoin. Now, there are plenty of potential downsides to any government, especially the United States, starting a sovereign wealth fund. We can start off by looking at Howard Lutnick's comment about owning warrants or shares in medical companies that the US government was involved with making them profitable. I'm sure anybody with any reasoning skills can see how a financial conflict of interest like that might not turn out the best. And if we've learned anything over the last 5 to 10 years, we want our politicians and our governments to have less financial stakes in their decision making, not more. Sovereign wealth funds breed the perfect storm for both fraud and corruption. One major example of this is the Malaysian sovereign wealth fund being one of the biggest investors in one of the biggest Ponzi schemes in history. This is a fantastic book called Billion Dollar Whale on the 1MDB fund, and it details the story of the con artist and this massive scam that he was able to pull off. But the reason why sovereign wealth funds particularly are more susceptible to things like this is because, number one, they do not have the proper incentives. The people who are running these funds don't have the personal liability if they make a bad decision, having that personal loss. You and I, we have our incentives aligned with our own investing. If we purchase an investment that goes down or goes to zero, we bear 100% of the liability for that. So we have skin in the game to make sure that, as far as we can tell, the thing that we are investing in will be a good investment. That does not exist with sovereign wealth funds, because at the end of the day, you have politicians and or bureaucrats who are managing these funds, and there is no liability if it goes the wrong way. But the other reason why sovereign wealth funds are breeding grounds for fraud and corruption is because of the sheer magnitude of the wealth that is poured into these funds. Because you don't need to deliver on any performance metrics or compete against other investment funds, you don't have to do anything right in order to get people to put money in your fund. This isn't like a hedge fund or a mutual fund or a money manager. There's no sales tactics, there's no performance metrics, there's no, hey, look at my track record, talk to your friends who have also invested with me, none of that. At the force of violence, because it's the government and they take money from you, they put some of it into this fund. And therefore the people who are managing this fund have an obscene amount of wealth that they have to make a decision on where to allocate it. And if the spending decisions of Congress are any indication of how investment decisions would be made with a sovereign wealth fund, we should want no part of this. But the final risk of a sovereign wealth fund, and this is a risk specific to the US because we control the global reserve currency, the dollar, it inches us closer to the cliff of hyperinflation. Let me explain. 300 years ago in France, there was a banker. His plan, which he implemented, was to collect all the gold and silver from all of the citizens, use that to back up a new paper currency. This was a fractionally reserved currency, which meant if he collected, let's say, $1 billion in metal, he would issue, let's say, $4 billion in paper notes. But it didn't stop there, because he also purchased shares of a real estate company called the Mississippi Company. It owned a large amount of land in what is now the United States, and it includes the area that is the state of Mississippi, and he bought shares of that company. And so the currency issued in France was backed up by gold, silver, and shares of a real estate company. But in order to continue to spend the money on the things that he thought would boost economic activity in France, he had to issue more and more currency. Sound familiar? The problem was, every time he issued more currency, the value of that currency would fall. So he got a brilliant idea to use the currency he was printing to buy shares of the Mississippi Company. That way it would drive up the value of those shares, and if the value of that company rose, he could use that to back up even more printing of the currency. As you can see, this is a problem, and what it led to was people unloading shares of the Mississippi Company because they knew John Law would have to print more money to buy those shares because it was the only thing preventing the value of the currency from collapsing. Now, I highly recommend looking into the Mississippi bubble because the whole story is fascinating, but we need to pay special attention to what happens when a government prints money in order to buy assets. Because if the assets are overvalued, then it allows a massive exit from people who couldn't sell before because there wasn't a buyer. Now they can sell to the government, who is forced to continue to print to buy more because now they need to in order to maintain the value of their sovereign wealth fund. Pushed to its extreme, this can cause a hyperinflation of the currency and the price of everything else denominated in that currency to go through the roof. But it's not all bad. These are the potential downsides. So are there any potential benefits? Absolutely. The first benefit is that right now, the United States government basically has no assets other than their gold, which we'll come back to in a minute. We run a massive trade deficit. We run a massive budget deficit. The United States net international investment position is insanely negative. And so the growth from a well-diversified and well-run sovereign wealth fund could someday offset the losses from the national debt, and pushing it to its extreme could someday even replace the income the government needs to get from taxes and borrowing. Now, the Treasury Secretary, Scott Bessent, said that we're going to monetize the asset side of the US balance sheet for the American people. It'll be a combination of liquid assets we have in this country as we work to bring them out for the American people. Now, I might be reading too much in between the lines here, but to me, that sounds like the gold that the United States owns, because there is no other asset that the United States government owns other than gold. And right now, the US government owns far more gold, allegedly, than any other nation on earth by a huge margin. In fact, the United States currently owns over 8,000 tons of gold, and the second place country is Germany at only 3,000 tons. China may be purchasing gold at a fast pace, but it still only has a total reported 2,000 tons. The crazy part about this is that currently the value of that gold is not listed at market value. The price of gold is currently $2,800 per ounce. If we do some quick math of 8,000 tons of gold, multiply that by 2,000 to see how many pounds, we can see the US government owns 16 million pounds of gold. If you multiply that by 16, you can see that the US government owns 256 million ounces of gold. Multiplying that by the price per ounce of gold at $2,800 per ounce, and we can see the US government owns about $717 billion worth of gold. Now, considering some of the biggest sovereign wealth funds in the world are Norway's at 1.8 trillion and China's at 1.3 trillion and the Abu Dhabi Investment Authority at 1.1 trillion, just the United States gold alone at current market prices would put the United States Sovereign Wealth Fund on an even playing field before any purchases are even made. Now, some people have speculated that in order to solve the national debt problem and the spiral of interest rates on that debt and those interest payments getting out of control, that the United States government would also have to revalue gold and just legally say that the value of gold is much higher than it currently is. Now, personally, I don't think that is a good idea or even very likely for something like that to happen, but considering the US has almost $1 trillion worth of gold, you wouldn't need that much of a larger multiplier on the price of gold for it to make a big impact on the asset side of the balance sheet for the government. Now, you also have people like Senator Cynthia Lummis indicating that the Sovereign Wealth Fund will be used to purchase things like Bitcoin. This sets you up for two potential benefits with the Sovereign Wealth Fund. Number one, owners and holders of gold, of Bitcoin, of stocks, of real estate could be massively benefited if you have another big buyer of assets come into the marketplace, starting to drive the price up. In other words, if you're gonna be buying gold, Bitcoin, stocks, or real estate, you don't wanna be doing it after somebody with a printing press starts buying. You want to own that thing before the printing press starts buying. The other thing here is if the Sovereign Wealth Fund is paired with a lot more financial responsibility on quantitative easing, issuing currency, borrowing, taxing, cutting spending, then you eliminate a lot of risk of collapsing the currency in the first place. Not only because you are reducing the liability side of your balance sheet, you're reducing the negative things you're doing to your currency, but you are also stockpiling assets so that you have something to balance out your sheet. That's why it's called a balance sheet. Now, given the fact that these things are usually done with surpluses, in other words, countries with sovereign wealth funds usually have more income from taxes than they spend, and they use that difference to invest in the assets inside their sovereign wealth fund. The United States is not in that position. So a little bit of a silver lining here could be an indication that they are trying to push that direction, that we're gonna have a sovereign wealth fund, we've gotta be able to fund it, we've gotta be able to have a surplus to do that. If that's the case, that would be unbelievably good for our country. However, that does present one challenge. So now what are the challenges to something like this happening? Even though the executive order has already been signed, it's not a done deal yet. Challenge number one, I just mentioned, these things are usually purchased with surpluses. And when they are not, in the example of John Law and the Mississippi bubble, you're essentially printing money in order to buy assets. That has a huge effect of pushing the price of those assets higher. It allows people to unload those assets at way overvalued prices, and it has downward pressure on the currency. And it becomes a self-reinforcing spiral where you have to print more and more to buy up those assets, because if you don't, now your currency collapses even faster. So it's very dangerous, especially with a debt to GDP ratio that the US has right now, with interest on the national debt exceeding 1 trillion, getting closer to $2 trillion annually, with running a $2 trillion deficit last year. It's very dangerous to be in a position where you're buying assets, starting a sovereign wealth fund, and you're printing in order to do so. And so a challenge here would be getting the spending down enough in order to have a surplus that you can use to put into a sovereign wealth fund. That is a massive challenge because yes, the Department of Governmental Efficiency is making huge progress on cutting spending every single day, finding fraud, finding corruption, finding places where they're spending millions and billions of dollars that money is not going to where they said it was going to go to, cutting unnecessary regulation and unnecessary expenses, things like the hundreds of millions of dollars spent on sushi every year by the Pentagon, things like hundreds of billions of dollars sent out in US aid around the world that never actually makes it to its intended destination. So a lot of good progress being made there, but if this is paired with tax cuts, that means the deficit will be the same. You have to reduce the spending, but also keep the tax income the same if you want that surplus to happen. If you lower both, the deficit stays. The relative difference between the taxing and the spending must reverse. You can't cut both at the exact same, otherwise you are funding a sovereign wealth fund through deficits, which is dangerous. The second challenge is that it's unclear right now whether this can actually happen without Congress. Now, it looks like the direction they're taking this is saying, hey, this is something that the Treasury already has authorization to do, because the way that you execute the law or carry out the law happens underneath the executive branch. The Treasury Department is underneath the executive branch, and they already have the authorization to do things like issue debt, borrow money, hold dollars with the Treasury General account. The US government owns gold. So it might just be saying, hey, we already have the authority to do something like this. Instead of just owning the assets we have, we'll own some other assets as well. But just because the executive order is signed doesn't mean this is a done deal yet. And the final challenge is that any significant stockpile of wealth that is able to be created underneath a sovereign wealth fund will attract every slimy, greedy bureaucrat who is power hungry and incompetent and just rubbing their hands together, and they're going to be wanting to do anything possible to get their hands on that wealth, which means that creating the sovereign wealth fund is not the only challenge. Maintaining it and continuing to grow it without somebody else coming in and draining it is arguably an even bigger challenge. And the final note that I think it is important to emphasize here is that any dollar the government spends must first be taken from somebody else. Whether that dollar is taken through direct taxation, borrowing, or the printing press, meaning that purchasing power is taken from you from higher prices through inflation, that purchasing power is taken from somebody else because the government doesn't have any of their own. That is also true regardless of what the government spends that money on, whether they're spending it on warfare, spending it on welfare, or spending it on a sovereign wealth fund. Now, it might be true that the US government taking money from you and putting it into a sovereign wealth fund could be better for you and future generations than spending it on welfare or warfare. But it is undoubtedly true that you and your future generations would be much better off if they just left that dollar in your pocket to begin with, even if you don't get the opportunity to dump your shitcoin to them and make them the bag holders at the end of the day. And if you'd like me to help you apply ideas like this to your investing so that you can grow your portfolio and also protect it during times of crisis, go ahead and click on the link in the description below. As always, thanks so much for watching. Have a great day.